First Republic, it's a privilege to serve. What is a personal line of credit? A personal line of credit is a set amount of money from which you can borrow up to the limit for a given period of time, referred to as your draw period. Similar to a credit card, you draw from the available balance only the amount you need, and you pay interest on that amount. In this way, a personal line of credit is a type of product that's known as a revolving line of credit. How does a personal line of credit work? With a personal line of credit, you have access to an available balance of funds available at any time during the draw period, and you have the ability to draw from the funds over time as you need them. Some additional considerations include, with a personal line of credit, you choose when to take advances, as opposed to a term loan, where you receive a lump sum at the beginning and start paying interest on it immediately. You only pay interest on the amount that you've drawn from a personal line of credit, assuming you abide by the lender's terms. Once the amount drawn against the personal line of credit is paid back, that amount is available for you to borrow from again immediately during your draw period. How can I use a personal line of credit? Juggling many financial responsibilities at once requires a certain level of finesse and, occasionally, a number of financial products. Sometimes, particular financial situations may require a significant influx of cash, even for individuals with significant savings. There are many different ways to use a personal line of credit, including refinancing student loan debt as well as others. Using a personal line of credit allows a borrower to pay off student loans from multiple lenders. It is also a good option for situations where expenses may be ongoing, like covering home projects, such as repairs or upgrades. Taking advantage of a personal line of credit to cover home expenses is beneficial because how much you ultimately borrow is up to you up to the limit of the line of credit, and you only pay interest on the money that you actually use. Note: by refinancing student loans, you may permanently be giving up tax and repayment benefits, including forbearance, deferment, and forgiveness. Please consider this as you make a decision to refinance student loans, and talk to a banker if you have any questions. Currently, all payments for certain types of federal student loans are suspended until May 1, 2022, per an executive order by the President. Interest will not accrue during this time period. What are the pros and cons of a personal line of credit? When considering whether a personal line of credit is the right product for you, it helps to consider some of the pros and cons. Pros: 1. Flexible access to funds. With a personal line of credit, the borrower has access to the overall limit of their loan throughout the draw period, which often lasts a number of years. This provides flexibility not only in the use of the funds but also when the money is actually used. 2. Pay interest only on what you use. The beauty of a personal line of credit is that the borrower only owes interest on the money that they actually use from the loan, rather than paying interest on the overall loan amount available to them. 3. Reusable cash flow. Assuming you abide by the lender's terms, once you've paid back the amount borrowed from a personal line of credit, the full amount becomes available to borrow again within the remaining time frame of the original loan. 4. Ability to strategically combine and pay off high-interest debt. Since the money from a personal line of credit can be used for a wide variety of personal or household needs, it's a good way to pay off higher interest debt, like a student loan or car loan. Cons: 1. Potentially high interest rates. Because personal lines of credit are typically unsecured loans, they may come with higher interest rates than other similar products that do require collateral, and the interest rates tend to be variable. At First Republic, though, borrowers have access to a personal line of credit with a fixed interest rate that starts at 2.5 minus 3.5 annual percentage rate April with discounts 1, which is much lower than the average 5.36 April. 2. Additional fees is common for lenders to charge annual or monthly maintenance fees on a personal line of credit, as well as other potential fees. First Republic Bank, however, waives all origination, maintenance and prepayment fees for the life of the loan. 3. May be difficult to obtain because the personal line of credit is unsecured. Most lenders require a credit score of 700 or above to qualify. Generally speaking, the stronger you are financially, the more favorable terms you'll qualify for. Secured vs. unsecured personal lines of credit. What's the difference? Personal lines of credit can be secured or unsecured. Unsecured lines of credit. For unsecured lines of credit, collateral such as a savings account is not needed to apply for the loan. Secured line of credit. For secured lines of credit, collateral would be required before you could gain access to the loan. An example of this is a home equity line of credit HELOC. With a HELOC, you're borrowing against the available equity from your home, and the home is used as collateral for the line of credit. Is a personal line of credit an open-end or closed-end credit transaction? A personal line of credit is an open-end form of credit, as opposed to a closed-end one. This means that the borrower can make multiple withdrawals from their account throughout the life of the loan. When money on the loan is paid back prior to the account closing, that money is then available for withdrawal again within the same draw period. This is different from a closed-end transaction, where borrowers are given a lump sum to use for a specific product or service, which they must then start paying back immediately on set monthly terms. Which is better, a personal line of credit or other types of credit? When deciding which type of credit is best for your needs, it's important to weigh all of the different options. Personal lines of credit vs. HELOC. A HELOC and a personal line of credit both provide flexible access to cash during a set draw period. The main difference between the two, however, is that a HELOC requires collateral. Your house and the amount of the loan will be based on your equity in your home. Please don't forget to like and subscribe my channel.